Natasha.
Hi. I am Joel. Welcome to Financial Freedom Lab, the podcast.
Okay, so today let's take a deep dive into this Reddit thread I found about medical expenses and tax deductions.
Sounds good.
It really got me thinking, like imagine you're facing a mountain of medical bills.
Oh, yeah.
Like say around $32,454 from IVF treatments.
Wow. Yeah, that's a lot.
You'd think there's got to be some tax relief for that kind of burden.
Yeah, for sure. You would think that.
Well, that's what this Reddit user thought too.
Okay.
And they were in for a surprise.
Really?
Yeah, they were surprised that even with those crazy bills, they were actually better off just taking the standard deduction.
Huh. That's interesting.
Yeah, they're married, filing jointly, make about $135,864 a year.
Okay.
So how does this even happen?
Well, the thing is, there's this thing called the 7.5% adjusted gross income threshold.
Oh, right, the AGI.
Exactly. It's like this hidden hurdle a lot of people don't even realize exists
Until it's too late.
until they do their taxes and they get hit with it.
It's kind of like a tax trap, right?
Mm-hmm. Yeah, you could say that.
You think you're going to get some relief, and bam, you're stuck with a higher tax bill than you expected.
Exactly. And the thing is, this 7.5% rule has been around for a while, but it's become even more of a big deal after the Tax Cuts and Jobs Act of 2017.
The TCJA.
Yeah.
Right, with the standard deduction going way up.
Right. A lot more people just aren't itemizing anymore, so they're not even getting close to that threshold.
It's like a double whammy.
Pretty much so. For this Reddit user, 7.5% of their AGI is about $10,000.
Okay.
That means they can only deduct the amount over that, so their potential deduction shrinks a lot.
So even though their bills were over $32,000,
Yeah.
they're only looking at deducting like $22,000 maybe,
Right.
which is way less than the standard deduction for married couples filing jointly.
Yeah, and that's going up to $29,200 in 2024.
Wow. No wonder the software told them to just take the standard deduction.
Makes sense, right? But here's where it gets interesting.
Okay.
This whole situation might actually be changing how people make healthcare decisions.
That's what I was thinking.
Really?
Yeah. Are people maybe putting off needed care because they know they probably won't reach that 7.5% threshold?
It's definitely a question worth asking.
Because there were comments in the thread that kind of hinted at that.
Like what?
Someone said they were paying almost $25,000 in mortgage interest
Oh, wow.
and still not able to itemize.
That's crazy. It makes you wonder if people are like factoring in these tax implications when they're deciding about their health care.
Like maybe going for cheaper treatments even if they aren't the best.
Yeah, and that's a scary thought, especially for people with chronic illnesses or who need ongoing care.
If you're already struggling with medical bills, knowing you won't even get a tax break has got to make those decisions even tougher.
For sure, it just adds another layer of stress to an already stressful situation.
And that's where I think understanding these things like HSAs is super important.
HSAs, yeah, those came up a lot in the thread. People were saying to max out contributions.
Right. But are they always the best solution?
Well, they can be really helpful, especially for people with high deductible health plans. But there's some downsides to think about, too.
Like what?
Well, you get tax-free growth and withdrawals for those qualified medical expenses.
Right.
But you might actually be delaying deducting those expenses.
So you're kind of balancing things out, the tax-free growth now versus a bigger deduction maybe later on.
Exactly, and that's why it's so important to talk to a tax pro who really knows the ins and outs of medical deductions.
That's a good takeaway for anyone listening right now.
Yeah, for sure.
Don't just rely on tax software or some random advice online.
No way, your situation is unique.
Yeah.
So understanding all those little details can make a real difference for your finances.
Absolutely, and I think that's a great place to stop for now.
Okay.
We can pick up in part 2 with some more of those specific deductions related to IVF and how to really maximize those tax benefits.
Sounds good.
Yeah.
You know, one commenter shared this really tough situation. They went through IVF, but it wasn't successful.
Oh, wow.
And they were wondering if they could still deduct those expenses from the unsuccessful cycle.
That's heartbreaking, adding insult to injury.
Totally. And while I can't speak to like the emotional side of it,
Right.
from a tax perspective, it seems like the IRS doesn't really care about whether a treatment was successful or not.
So at least there's that. Right?
Yeah. As long as the treatment itself was medically necessary, the expenses should be deductible.
Okay, that's helpful to know.
Yeah.
Now, another thing I saw in the thread was about filing separately to maybe lower that AGI threshold.
Oh, interesting.
Could that actually work for couples dealing with high medical expenses?
You know, it might in some cases,
Okay.
but it's kind of risky because remember, if one spouse itemizes,
Yeah.
they both have to.
So you can't just lower one person's AGR.
No, you got to look at the total deductions for both and see if it's actually better overall.
And a lot of times filing jointly is still the way to go.
Yeah, especially if one spouse doesn't have a lot of deductions themselves.
So again, it comes back to getting that personalized advice and running the numbers for your specific situation.
Always. It's never one size fits all with taxes, especially medical expenses.
Right. Okay, so let's get into some of those specific deductions related to IVF.
Okay.
Some people were asking about things like parking fees at the clinic, mileage for picking up meds, even travel costs for appointments with specialists out of town.
All of that can be deductible potentially.
Really?
Yeah, the IRS says transportation costs that are mainly for medical care are okay.
Okay.
So driving, parking tolls, even flights if you have to travel far.
So it's super important to keep track of everything,
Oh yeah, for sure. Mileage receipts, all of it.
just in case.
You need proof if you get audited.
Now, here's a tricky one. Someone mentioned deducting the cost of prenatal vitamins and other pregnancy stuff if they were getting ready for a pregnancy from IVF.
That's a tough one. The IRS doesn't really talk about those specific costs directly.
I see.
The general rule is that the expenses have to be for like diagnosis, treatment, prevention of disease,
Right.
or for things that affect your body's structure or function.
So those vitamins and supplies could fall under that.
Maybe, especially if the doctor recommended them as part of the IVF treatment.
Right.
But, clear documentation and talking to a tax pro are key in those iffy situations.
It really feels like talk to a pro is the theme here.
It kind of is,
Makes sense, though. There are just so many details and gray areas.
Exactly. Taxes aren't always black and white, and
Yeah.
medical expenses are personal and complicated.
Okay, what about egg donor costs?
Oh, yeah, someone asked about those.
If IVF involves a donor, are those costs deductible?
Another great question, and again, the IRS doesn't specifically say anything about egg donors.
Okay.
But if a doctor says those costs are necessary for the treatment,
Yeah,
then they could be deductible under that medical necessity rule.
got it. But probably best to get professional guidance there, too.
Definitely a tax pro who knows about medical expenses can give you the best advice for your situation.
Sounds like finding the right tax person is crucial.
For sure, especially with something as complex and expensive as IVF.
Absolutely. Okay, so shifting gears a bit.
Okay.
Someone was asking about when you can deduct expenses.
Okay.
Like, can you deduct medical expenses from last year on this year's taxes?
Unfortunately, no.
Oh, no.
There's a time limit. The IRS says you generally have to deduct expenses in the year you paid them.
So no going back and claiming old expenses.
Right. It's use it or lose it.
Yeah.
Which is why tracking everything and planning ahead is so important.
It's gotta stay organized and know what your options are.
Exactly. And that's where HSAs and deductions get really interesting.
Okay.
One person said if you reimburse yourself for medical expenses from your HSA, you can't also deduct those same expenses on your taxes.
Wait, so you're paying for medical expenses, but you don't get the tax benefit either way?
It's to prevent double dipping.
Okay.
The HSA benefit comes from either deducting contributions or not paying taxes on withdrawals for medical stuff. You can't do both.
So if you use HSA money, you're choosing to use that tax-free benefit now
Right.
instead of maybe deducting those expenses later.
Actually, it's all about strategy and what works best for you.
Another trade-off to consider.
You got it. And this is just one example of how complicated it can get with
Yeah.
medical expenses and taxes.
Definitely. Which brings us back to why personalized advice is so important.
For sure. The more we talk about this, the more I realize how much you need a guide to help you through it.
It's a lot to handle on your own.
Totally taxes, medical expenses, it's overwhelming.
And there are people who can help.
Yeah, don't be afraid to reach out to a tax professional.
They can answer your questions and help you make the right choices.
Exactly. And they can also help you find tax credits you might qualify for.
Oh, right. Those can be even better than deductions?
Yeah, because they lower your tax bill directly.
Like a hidden bonus on your tax return.
Pretty much. And that's why having someone who knows what they're doing is so valuable.
Okay, so before we move on to the last part of our deep dive, where we'll talk about the TCJA and some other interesting stuff from the thread,
Okay.
what's the main message you want listeners to take away from all of this?
I think the most important thing is you don't have to figure all of this out by yourself.
Yeah.
There are resources available, professionals who can guide you and other people going through the same thing.
Exactly.
Don't be afraid to reach out, ask questions, and advocate for yourself, both for your health and your finances.
That's a great message, and it leads perfectly into the final part of our deep dive.
Okay.
But first, a quick word from our sponsors.
Okay, so before the break, we were talking about all those deductions like HSAs and the 7.5% AGI rule.
Right.
But now I kind of want to zoom out and look at the bigger picture, you know?
Okay, yeah.
Like, remember that comment about someone paying $25,000 in mortgage interest
Yeah.
and still not being able to itemize?
Oh, yeah. That was crazy.
It really makes you think about how the Tax Cuts and Jobs Act is maybe changing how people make decisions about their health care.
It is kind of ironic.
Right.
A law that was supposed to make taxes simpler might actually be making healthcare more complicated.
Totally. And it's not just the TCJA.
Right. This whole thread got me wondering about the system itself.
Oh, yeah.
If it's harder for people to reach that 7.5% threshold,
Right.
does that mean they're less likely to get preventative care?
That's a really good point.
Yeah.
You know, early intervention is usually better and cheaper in the long run.
Yeah.
But if people are worried about not getting a tax break,
All right.
are we basically encouraging them to wait until they're really sick?
It's like we're saying, don't take care of yourself until it's an emergency.
And that could end up costing everyone more in the long run.
For sure. And it's connected to those high deductible health plans and HSAs too.
Yeah.
HSAs have their benefits, but they also put more costs up front.
So it's like only the healthy and wealthy really benefit.
It feels like we need to rethink how we approach healthcare policy.
I agree. We need a system that takes into account all these financial factors that influence people's choices.
Definitely. And you know, one thing I really appreciated about this Reddit thread was how supportive everyone was. Like, even though finances can feel really personal, people were sharing their experiences and giving each other advice.
That's great to see.
It shows that you're not alone in this.
For sure.
Yeah.
Sometimes just knowing that other people have been through similar stuff can be a huge relief.
So if you're feeling lost or overwhelmed, reach out to online communities, support groups, even financial counselors.
Good advice.
You don't have to do this alone.
And remember, the more you know, the better prepared you'll be.
Absolutely, knowledge is power.
That's right.
Well, this deep dive started with one person's question about IVF deductions.
Yeah.
But it's really opened up a much bigger conversation about healthcare taxes and personal finance.
It just shows how connected all of these things are.
Right, and how they impact all of us in different ways.
Exactly.
Thanks for joining us on this deep dive into the world of medical expense deductions.
It's been a pleasure.
We hope you learned something new and feel empowered to take control of your health and your finances.
Until next time, take care.